Hey traders, good morning. Let's do a quick audio check and then we're going to jump in. I've got a good 15 minutes to cover a few things with y'all, and then I got to hit the road real quick here before the open. But before we jump in, let me hit y'all with a question. How many of you listening in have been trading for, call it a year or less? How many of you have about a year of experience or maybe a little bit less under your belt? And the reason that I ask is, no fault of your own, but if you are a newer trader, you've been in the game for, we could even say 2 years, but really for the last year or so, the reality is you only know one market. So let's just kind of talk, September 2022, September 2021. If you're jumping into the game here, like one market and one market only, a market that pulls back and then rips right back towards the highs, pulls back, rips towards the highs. So you only know this incredibly bullish, just incredibly resilient market. If October is a total chop fest, or if we start to trend to the downside, that's going to be a new experience for a lot of you. So I think, give yourself the ability here, if you're a new trader, to take a couple of bumps and bruises, right? To learn a few lessons here, because this is brand new for you. Again, no fault of your own. The market's just been on crack for like the last 2 years or so. But that is the reality. And I bring this up because when the market is bullish and when we have bullish momentum and the trend is intact, and every time we pull back, like 4 days later, you're back at an all-time high. When you're working with that kind of market environment, a lot of things will work, especially the setups that we tend to focus on. So to kind of drive home the point here, let's just take a look back here at August. You did get a bit of a dip here in August, but I want all of you to take note. You're dipping into a really bullish structure. Still got positive momentum on the histogram. You had a daily squeeze. You had stacked DMAs. So you're getting that little nasty 2 to 3 to 4 days of selling pressure. But everything continues to be bullish. This time around, we're really losing momentum. But just taking a look here back in August, you have that bullish momentum to the market. You have the structure. You have the squeeze. And what I really want y'all to focus on here is that most recent push to the upside. So your S&P 500, your QQQ back here towards, call it the end of August, they're setting up in daily squeezes and then they fire to the upside. This is important because those setups that we like to focus on, that's when they're going to treat you really well. So when a Facebook daily squeeze is really going to work its best, when the market at the same exact time is setting up for a move towards 2 to 3 ATR. You have that wind at your back. Apple. That Apple daily squeeze worked back in August because of the market. Tesla back in August pushed higher because of the market. NOW because of the market. The real estate sector because of the market. The communication sector because of the market. So it's no coincidence that we're looking at different sectors, we're looking at different stocks, all of which are basically squeezing going into August, and at the same exact time, they're all pushing towards the upside. So those daily squeezes and uptrends that we really like to focus on, they work incredibly well. And you can easily have that 70, 75+% win rate with the wind at your back. Those trades work really, really well when you got the wind at your back from the overall market. We don't quite have that right now. So again, especially if you're a newer trader, this is really important to understand. The same exact setups, the same exact entries, exits, thought processes, mentalities, the same everything that served you really well back in August and back in July and June and April and May, they're not going to serve you as well with this kind of structure to the market. So a really good example of this, we got stopped out of ZS yesterday. Look at the quality of the trend here. This was like close to picture perfect. Beautiful trend, daily squeeze, there's stacked DMAs, there's green 10x bars everywhere. It's picture perfect. And if you look at the rhythm here of a stock like a ZS, you had a nice daily squeeze back here in August. Same exact structure as this daily squeeze, right? Taking the same exact entry, everything's the same, but the difference here is that squeeze exploded to the upside because you had a market behind you. Now here we are in September, you get that same exact pitch getting thrown your way here in a stock like a ZS, and everything gets a little bit sloppy. So the sloppiness here has nothing to do with the stock. The sloppiness has everything to do with the overall market. And that big push that ZS made back here into the end of August, early September, had nothing to do with Zscaler, had everything to do with the overall market. So we're just in one of those moments in time right now where, I think Netflix is, at least on my watch list, by far it's the cleanest setup out there. But the reality is, it's not as high probability of a trade to take in Netflix right now as it would be, again, back in August. We're just back really in any period of time where the S&P 500, the QQQ have a bullish structure. And take note here, compare a Netflix to, say, an Apple or a Facebook or a Microsoft or a Google. Netflix holds up incredibly well. And I do think if the market can bounce a bit here, things like a Netflix, things very much like, say, a Tesla, the stocks that have done a really good job of holding structure, if over the next week or so, your index is bouncing back to the 21 EMA, I do think you see stocks like that make a nice move towards the upside. But in terms of opportunity elsewhere, that's where things are a little bit tough right now. Sure, if the market bounces, then something like a Netflix that's holding up really well, it should make a pretty solid move. But from another perspective, on the other side of things, if this market just keeps leaking out here and continues to grind lower, all that's doing is putting pressure on Netflix. So there's a potential where we're going to find the same exact setups, the same exact trends, like same exact criteria that was killing it for us back in August. But without a market behind us right here, the setups might not work in your favor as good as they would back here. So that's a major thing I want y'all to take into consideration. To an extent, running the scans, looking for good looking setups, it doesn't make too much sense just yet. Again, all of it works incredibly well with a market behind you. All of it is just way too hit or miss with no market behind you. So I think the key to trading one or two setups, and if you're going to do that really for the duration of your trading career, you need to know when the probabilities are really stacked in your favor. Now, bullish market, bearish market, regardless, I think if you're really good at your one or two setups, you're probably going to have like a 70, 75% win rate. But a big part of that is acknowledging, are we in the type of market environment right now where, there's a higher probability that my next 10 trades are going to be the 70% that work? Or are we in the kind of environment right now where my next 10 trades, they might be the 30% that don't work? It's kind of where we are right now. So as I start to see the market losing daily structure here, and then as I start to see names like a ZS where, everything is lined up perfectly here, I'll start to get a little bit sketchy. Tells me a lot about the market. So we still have positions in Tesla. And if there's anything that I think can buck the trend here, it's something like this. You're firing a weekly squeeze. You've got the daily squeeze setting up. So I do think Tesla potentially could be one of the few names here to buck the trend. But obviously, if the market starts to bounce here, it just does Tesla a lot of favors. So personally, I'm looking to see if it can get through 800 towards the end of the week. It's probably where I'm going to take profits and move on to the next one. And we do have a position here in Netflix. Probably my favorite setup in the market. So again, it's probably good for nothing if the market does continue to roll over. But at the very least, if this market can just kind of chill the hell out and stabilize, or even better, get a bit of a bounce going, then I think, Netflix gets off the leash and gets ripping higher here. Weekly squeeze, very much like Tesla, is firing to the upside. Whole bunch of bullish momentum. Your daily squeeze is rock solid. And even in the midst of all this volatility, there's a great looking 4-hour squeeze. So, If you're looking to get long, those are two spots I would suggest you take some consideration to doing it, but scale down in position size, if anything. That's a great looking chart. Tesla's a great looking chart. Home Depot pulling back here is a great looking chart. LOW is a great looking chart. All of these good looking charts have, it's like a coin flip with no market behind you versus that 70, 75, maybe 80% probability these kinds of things work out in your favor. So, I think over the next 3 to 4 weeks, let's just have the realization, the market has been just like kind of absurdly strong all year long. So the idea here that at the very least it takes a month of August, that we just kind of chop here for the month of October, that wouldn't surprise me. Also wouldn't surprise me if we start to grind a little bit lower. So I think biggest piece of advice here is be patient. And in terms of shorting the market, I won't consider doing that until we're breaking under the weekly 21. Though the daily charts are a little bit ugly here, your weekly trend is still intact above the weekly 21. So, it's like, do I want to short here or would I rather get long? Would I rather have gotten short here or would I rather have gotten long? And you can look at that on the cues. So you try to short there, you get slammed, right? You try to short there, you get slammed. So it's like, keep getting smoked trying to short into what should just be pretty big support here. So I think you want to be careful about shorting into weekly support, especially when your daily charts are already pretty cooked to the downside. Where I would probably be a bit more open-minded to trying to short this market is if we begin to break the weekly 21 EMA. So I want to see that flush that breaks weekly structure. Then I'm looking to short the next bounce. But generally speaking, anything above that weekly 21, you're looking at a bullish trend. And for me, the moves into the weekly 21, until proven otherwise, they can make for some of your best buy the dip opportunities of the year. So that's the interesting dynamic. Do these really ugly daily charts end up really kind of turning on the selling pressure here, or is this just a pullback to weekly support and potentially the last good buy the dip opportunity of the year? I think a little bit too early to tell. So a few different setups here, but again, you want a market behind you ideally. So you got Broadcom pulling back to the 50. Not the cleanest setup in the world, but compared to a lot of names out there, pretty solid. I think you got a decent looking daily squeeze here in CVS. And just compared to a Facebook and Apple, that's what I'm looking for. I'm not trying to get involved in the renovation project. That's going to be Apple's daily chart here. So if I'm trying to get long anything, it has to look like Tesla. Generally unfazed by the overall market. It's got to look like a Netflix. It's got to look like a CVS, potentially. So that's pretty solid. I think HCA, pretty solid as well. Etsy holds up okay yesterday. I know a few of you in here were looking at Ulta last week, and that behaves really good. And I do like the dip here on Morgan Stanley. So those are a few things I got for y'all. Again, I got to kind of keep it short today, but just going back to what I was saying there at the beginning of this session, come to that realization. If you are a newer trader, and for the sake of our discussion this morning, let's just say a newer trader is a year or less than experience, you really don't know anything other than this kind of cracked out market that dips and then just explodes. And this is important because for the last, call it 12 plus months here, in a sense, the market has been, quote unquote, selling people the dream that it actually is this easy. Like, yeah, you can make a living, and a pretty damn good living, buying out the money calls every time the market dips. And the market might lull you into the idea that that's realistic for 2 months, for 6 months, for 9 months, for a year, for 2 years. I think for the newer traders, you're going to get a little bit more of reality here. We're buying out the money calls on every dip, and everything that works when it's almost tough to mess things up. A lot of that stops working here. So be be easy on yourself. If you're taking some bumps and bruises here, if you're getting caught up in the selling pressure, you're getting shaken out, tossed around, go through the learning experience of, again, for a new trader, what is definitely a new environment here, at least for the time being. How are we doing on time? 9:01. All right, let me see if y'all got any questions. El Toro Loco. The Crazy Bull. What you got, Crazy Bull? KNX. I like that. See, Jay-Z knows what I like. CBRE. I like that. Again, if this market just keeps kind of drooling on itself, everything's liable to go lower. But Jay-Z, whatever you got here, my friend, they're clean. That's the mindset. It's like, hey, here's another good example. That's pretty solid too. So it's like, hey, if the market is going to bounce, right? If I'm actually going to be looking for trades, for some exposure to the upside, like I don't like that Apple chart. Like that's a total mess here. Granted, if the QQQ just rips to the upside, then so is Apple, so is Google, so is everything. But where am I going to put my capital if I'm trying to take advantage of 3 to 5 days of the market just bouncing back towards the upside? A weekly 3-day 4-hour squeeze, bullish momentum, nice pretty picture here like a Netflix, or some nastiness in a name like Apple. I'd rather focus on things that are holding up there. In KNX, CBRE, those are good examples. Those are definitely good examples. Okay, Dan, great question. Great question, Dan. Let's see if we can get that up there. Boom. What if the 9 EMA is below the 21 EMA? When do I recommend to enter a position? So, Dan, and mind you, I tend to focus on pretty much just daily charts, but really for any time frame. For me to take a long position, what I'm looking for is referred to as positively stacked EMAs. And I'll put this in the chat for you here, Dan, but basically what that means is that your 8 EMA, oh God, I always forget this. Your 8 EMA is on top of the 21, which is on top of the 34, which is on top of the 55, on top of the 89. 8, 21, 34, 55, 89 EMAs all on top of each other. In plain English, what that means is you got a good bullish structure. Like structure is intact, trend is intact, momentum is intact. So again, just for kind of comparison here, Facebook does not have positively stacked EMAs, meaning that 8 is not on top of the 21, 34, etc. Now you can see just how sloppy it is here. Back here, you did have positively stacked EMAs. You had a daily squeeze. You had a lot going in your favor there. So for me, it's a huge part of the process. 9.9 times out of 10 am not going to get long if the EMAs aren't stacked positively. And that makes my job so much easier because I can pull up any chart. What's a random ticker, like Twitter? I won't trade that. I don't even have to look over here. I won't trade that. Alibaba or Boeing. Can't trade that. I see something like a Tesla, like, okay. Just by knowing the EMAs are stacked positively, now I know there's trend intact, there's structure intact, there's momentum intact. What I've found is when the EMAs are stacked positively, there's a much higher probability of that squeeze firing to the upside. Where the ones that tend to fire short or the ones that do eventually fire long, but they don't do it before they shake everybody out, those nasty ones tend to not have stacked EMAs. And here's your polar opposite. Negatively stacked. So K Harper, that's a good question. I think it depends. I mean, it depends on a few different things. So you're coming into expiration day, you got to put credit spread. If your option is like, so for sale, we'll just look at Netflix kind of conversation's sake. Say you sold the 580 put in a put credit spread that expires this Friday, and into Friday we're just kind of chopping above 580. We're hitting 580, like it's cutting it close. I will try to hold that and give it as much time as it potentially needs to start bringing in some premium for me. So if it's cutting it close to the short strike, I'll try to give it some wiggle room. Instead, if you sold, the 580 puts and Netflix is at, 570, now I would just say you probably want to scrap that. You really got no chance of survival here unless Netflix really bounces. Where if you're close to your short strike, it kind of skating on that thin line of max profit, break even, small loss. So I think it just depends on where your short strike is at, really. Um, so Jay-Z, the answer is yes to your question as far as the progressive, the progressive exposure. The answer is yes, though as a team, there would be a few things we would want to discuss first, which are kind of reading my mind, because that's a discussion I got planned for us on our session together Thursday in the Mastery, just in regards to the position sizing and things of that nature. So ask me that again on Thursday, because we're going to be on that topic, my friend. But all right, y'all. Let me make sure I got everybody. Good morning. Good morning. Good morning. Meet up in the locker room. Exactly. But that's what I've got for you, y'all. If you are looking to get long in the face of the volatility index acting a fool, in the face of just daily charts that really do leave a lot to be desired for your S&P and your QQQ, I think it's got to be something that's just like, best in breed. But you take these trades and the understanding, mama market keeps on sinking here. Very, very high probability down goes Netflix. As much as I think Tesla is just trying to get silly to the upside, market keeps on leaking. Probability suggests down goes Tesla. So, if anything, scale down in position size. If anything, give your trades time to work. Just think you got to make a few adjustments here, because we're not back in August anymore. We're not back in August. We're not back in June, July. We got a flush, but the difference here is, you've lost structure. You've lost momentum. And before I let you go, let's go sector to sector real quick. That's an ugly daily chart in technology. That's a really ugly daily chart in the industrials. This is an ugly daily chart in utilities. Semiconductors, I mean, that's a bit iffy here as well. Healthcare, which was one of the best trends by far this year, it's taken some big damage. Communications, probably the strongest trend this year, completely throws in the towel. The only thing looking somewhat decent here are your financials, but that's not the prettiest picture going. So interesting times, y'all. Interesting times. My game plan for the Mastery is, as long as Netflix and Tesla don't break any rules, we're going to hold on to them, with the idea that if the market, at the very least, can start to grind back towards its 8 or 21 EMA, because Netflix and Tesla held up so well, they should get a little bit of a green light to make the push that we need for our exit orders to get filled. But be patient here, be disciplined, and remember, really, regardless of your age, you probably got a shitload of trading ahead of you. So to take it easy for 3 days, to take it easy for a week, 2 weeks, to just kind of take your foot off the gas slightly here until the market presents, for you, what is a more favorable environment? Nothing wrong with doing that. We got a lot of trading ahead of us. So enjoy your day. Options or members, I will see y'all in about an hour. I'll also be in the training room later. So busy day. Let's get to it. Talk to you soon.